Friends, we are now starting with homework solution for death of partner. Solution for homework section for death of partner. Look at question 1, page number 161. Question number 1. We'll firstly go through the question, what is the information provided. B and N are partners. Partnership deed provides inter alia that the accounts be balanced on 31st December each year. So they are following calendar year here. That the profits be divided as follows: B 1/2, N 1/3, and carried to reserve 1/6. Of the total profit, 1/6 is being transferred to reserve. Balance is shared between B and N as 1/2 and 1/3. So can we say 1/2 and 1/3? If we make the denominator same, it will be 3/6 and 2/6. Can we say they are sharing profits in the ratio 3:2? They are sharing profits in the ratio 3:2. Yes, sir. Now, in the event of death of partner, his executor will be entitled to following: capital to his credit on date of death, proportion of profit to date of death based on average profit of last 3 years, share of goodwill based on 3 years purchase of average profit of 3 preceding years. Trial balance is given, wherein you are given capital and reserves balances. Profit of 3 years just before date of death is given. N died on 1st May 2016. So he is dying after 4 months of start of accounting year. Show calculation of N, first share of profit, share of goodwill, and then draw N's executor's account as would appear in firm's ledger, transferring the amount to his loan account. The amount due to N is not paid immediately in cash, it will be transferred to his loan account. So we'll firstly start, friends, with calculation of N's share of profit. Now for calculating that, read point B again. Proportion of profit to date of death is to be calculated on the basis of average profit of last 3 completed years. So we need to firstly calculate their average profit of last 3 completed years, correct? We are given profit of last 3 years as 42,000, 39,000 and 45,000. So average profit comes to 42,000, I suppose. Average profit is 42,000 and average profit means profit of 1 year. Now, how much will be profit of N up to date of death? Profit of N up to date of death. We have estimated that profit for entire year is 42,000. Profit for this entire year is estimated at 42,000, but this is profit of 12 months. Partner N died after 4 months on 1st May. So how much should be profit of 4 months first of all? 42,000 into 4 by 12. The profit sharing ratio was 3:2. So N's share in profit is 2/5, friends, 2/5. So 42,000 into 4 divided by 12 into 2 divided by 5. It is 5,600. Correct? Yes, sir. Second question, we are also supposed to calculate his share in goodwill. To calculate his share in goodwill, how much is goodwill? Sir, goodwill is point C. Read point C. 3 years purchase of average profit of 3 preceding completed years. So how much is goodwill, friends? Average profit was 42,000 and goodwill is 3 years purchase of average profit. So firm's goodwill is 1,26,000 and N's share in goodwill. N's share in goodwill will be 1,26,000 into 2 by 5. 50,400, correct? Yes, sir. So we are preparing N's executor's account, correct? We are preparing this account on 1st of May 2015. 1st of May 2016. N died on 1st May 2016. On 1st of May, balance in his account, capital account, N's capital account is 60,000. Plus, we are also given reserves. So, reserves will be distributed among partners. Since there is death of partner, there is bound to be reconstruction. So, reserves are total 30,000. And in that 30,000, N's share is 2/5. N's share is 2/5, correct? That comes to 6,000. Then we are supposed to give him his share in profit. Entry we need to pass is, since it's estimated profit, P&L suspends to N's capital. N's share came to 5,600. We are also supposed to give him his share in goodwill. B would be giving him his share of goodwill. And his share of goodwill came to 50,400. Balance now remaining in his account, 1,16,000. That balance will be transferred to his executor's account. To N's executor's loan account. 60 plus 12 plus 5,600 plus 5,400, 1,28,000. That will be transferred to his loan account. Correct. Now pause and copy. Friends, question 2 in death of partner, page number 162. What is the information given? A, B and C are carrying on business with following assets with effect from 1/1/19. So they are in partnership, their assets are given. Their profit sharing ratio was 5:3:2. Capital is also shared in the same ratio. So their capital is in the ratio 5:3:2. B died on 30th June. His son claimed his father's interest in the firm. Can I say his son is his executor, his legal heir, and he is demanding his father's share in the firm? The following was the settlement. Allow his capital to his credit on date of death. 5% per annum interest on capital is to be given. His drawings at the rate of 600 per month he has withdrawn already, which he withdrew at the beginning of each month. He be allowed to retain their drawings as part of his share of profit. Interest at 6% per annum be charged on his drawings. They had separate life policies for which premium had been paid out of profit and loss account of firm. So 50,000, 60,000 and 30,000 is the amount of policy for which premium is paid by the firm. Surrender value of A's policy was 50%, whereas C's policy it was 40% of policy amount. Goodwill was evaluated twice the average profit, which were 3,600. Prepare B's personal account. We are supposed to prepare B's capital account, that is his personal account, so that we can calculate amount payable to his executor, his son. So we are preparing B's capital account, and to prepare capital, whatever working is required will along with that do that working, correct? Yes, sir. Now friends, we are preparing B's capital. Looking at first paragraph, there is no balance in B's capital given, but we are given information about assets of the firm on first date of the year. So in order to calculate B's capital, what we can do, we can prepare his balance sheet on first date of the year. We can prepare his balance sheet on first date of the year so that we can find out his capital. Now, what information for assets is given? We are given information for furniture. Furniture is 18,000. Machines 72,000. Cash balance is 10,000. Debtors are of 20,000. So can we say total assets of the firm are 1,20,000? Total assets of the firm are of 1,20,000. Therefore, total liabilities also should be 1,20,000. Since there is no other liability given, we would say this 1,20,000 is nothing but capital of partners A, B and C. Capital of A, B and C is 1,20,000. And sir, ये भी दिया था capital is also shared in profit sharing ratio. मतलब उनका capital ratio दे दिया है. It is 5:3:2. So can we say 1,20,000 if divided in 5:3:2, it comes to 60,000, 36,000, 24,000. 1,20,000 को 5:3:2 में डिवाइड करेंगे तो तीनों पार्टनर्स का कैपिटल मिल जाएगा. So we now have B's capital. We now have B's capital on 1/1/19. B's capital in business was 36,000, sir. B का capital business में कितना था? It was 36,000, friends. Correct? Now, what else is to be given to B? We'll go by what is agreed between partners. 5% per annum interest on capital is to be given. B died on which date? Sir, B died on 30th June 2019. B died on 30th June. So we need to calculate and give interest up to 30th June. How much will be interest on capital up to 30th June? See, his capital balance was 36,000. On that capital balance, we are supposed to give interest at what rate? 5% for 6 months. So, interest on capital for B comes to rupees 900, correct? Yes, sir. Then what else is to be given? Point 3. His drawings had been 600 per month. He is withdrawing 600 every month. If he is withdrawing 600 every month, can we say up to 30th June he must have withdrawn 3,600? That drawings will be debited to his capital account. 600 every month for 6 months. He must have withdrawn 3,600, correct? Yes. We are also supposed to calculate interest on that drawings. How much will be his interest on drawings? How much will be his interest on drawings? Let's calculate, sir. Now friends, he is withdrawing on which date? Sir, he is withdrawing on 1st January, 1st Feb, 1st March and so on up to 1st of June in the beginning of every month. So can I say he is making a uniform drawings? Yes, sir. So we may calculate interest on total drawings, but for average months. The drawings which is made on 1st January, we are supposed to calculate interest up to 30th June. We are not calculating interest up to 31st December. So 1st January to 30th June, we are supposed to calculate interest for 6 months. And on that drawings which is made on 1st June, we are supposed to calculate interest for 1 month. So can I say 6 plus 1 divided by 2? We are supposed to calculate interest for an average period of 3.5 months. We are supposed to calculate interest for an average period of 3.5 months. Yes, sir. So how much will be his interest on drawings? On 3600. On total drawings, we are supposed to calculate interest at 6% for 3.5 months. On 3600, 6% for 3.5 months. So his interest on drawings comes to 63. Correct? Interest on drawings comes to 63. Yes, sir. What else is to be given? They had separate policies. So we need to calculate his share in joint life policy. We need to calculate firstly, on death of partner, how much will be received from insurance company. On death of B, insurance company will give on death of B, insurance company will give policy amount for B. जिसका डेथ हुआ उसका पॉलिसी मैच्योर हो गया, तो पॉलिसी अमाउंट फॉर बी दैट कम्स टू 60,000 and surrender value for policy of A and C. Surrender value for A, sir, it is 50% of his policy amount, that is 25,000. A का policy amount 50,000 है, उसका 50% 25,000. C 40% of policy amount. C का policy amount 30,000 है, 40% will be 12,000. So can we say from insurance company how much will be received for policy? It is 60,000 plus 25,000 plus 12,000. We would be receiving 97,000 from insurance company. We would be receiving 97,000 from insurance company. Full policy value of B, and for A and C we would be receiving how much? 97,000. Is joint life policy an asset in books of firm? No. They have clearly said that premium was paid out of P&L. So they were charging premium to P&L. And since they were charging premium to P&L, they were following first method. That means they were not creating any joint life policy account in books. Joint life policy here remains as an unrecorded asset in books. Its book value is 0. Sir, if it's unrecorded asset, if its book value is 0, whatever we receive from insurance company is our profit? Yes, sir. So this entire 97,000 is our profit. And in this profit of 97,000, we are supposed to calculate B's share. B's share in profit of joint life policy. B's share in profit of joint life policy will be 97,000 into 3 by 10. B's share in profit of joint life policy 29,100, sir. So for this profit, what should be the entry passed? Joint life policy to partners capital. Joint life policy to B's capital. Correct? It is 29,100. What else is to be given, sir? What else is to be given? Goodwill. Now, goodwill was evaluated twice the average profit, which was 3,600. Goodwill was evaluated at twice the average profit. So, average profit is 3,600. So, firm's goodwill will be 3,600 into 2, 7,200. And B's share in that goodwill, 7,200 into 3 by 10. So 2,160. So this 2,160, his share in goodwill will be given to him by A and C. We may directly write by A and C's capital. So now calculate how much is the final balance remaining in B's account. How much is the final balance remaining in B's account? $36,000 plus 900 plus 29,100 plus 2,160. Total comes to 68,160. See friends, they are also saying, if you read point number 3, he is allowed to retain their drawings as part of his share of profit. That means his share of profit up to date of death is being considered as 3,600, as the amount which he has withdrawn. जितना उसने ड्राइंग्स किया है उतना उसका प्रॉफिट का हिस्सा मान के उसको रखने दिया है. मतलब 3,600 उसका प्रॉफिट हम मान रहे हैं अप टू डेट ऑफ डेथ. तो वो प्रॉफिट उसको देने के लिए क्या एंट्री पास करेंगे सर? P&L suspense account debit to B's capital. Correct? So 2,160 plus 3,600 plus 29,100 plus 900 plus 36,000. 7,1,760. $68,097 is the final amount due, which is to be transferred to his son's loan account, to B's executor's account. Correct? Yes, sir. So you may pause and copy this. Friends, question 3 in death of partner, page number 162. What is given? A, B and C are partners sharing in ratio 2:1:1. They close their books on 31st December each year. So accounting year they are following is calendar year. A died on 28th of Feb 2011. B and C decided to share future profits in the ratio 3:2. On this date, their balance sheet is given. Now in balance sheet you can see balance sheet of which date, friends? It's balance sheet on date of death. It's balance sheet on 28/2/2011. So here they are not estimating how much is the profit. They have actually closed books on date of death. They have actually prepared trading and P&L account on date of death and balance sheet on date of death. So therefore in that balance sheet you can see profit for 2 months, but that profit is before appropriations. It is before interest and salaries. There is also a joint life policy reserve of 3,600, and on asset side there is balance in joint life policy 3,600. According to partnership deed, interest on capital is to be allowed at 6% per annum. They are entitled to salaries of 300 and 200 per month. In the event of death of partner, goodwill was to be valued at 2 years purchase of average net profit of 3 completed years preceding death. Net profit for 3 years is given. Firm had taken a joint life policy with profit policy, rupees 10,000. Insurance company admitted a claim of 12,600 including bonus. A's share was paid to his executor. B and C continued the firm. You are supposed to prepare profit and loss account, capital account and balance sheet. We'll start with the balance sheet which is given. In balance sheet, we are given loan to A 4,000. Now at the time of reconstruction, will A repay back his loan? No sir. A's loan will be adjusted to his capital only. Capital balances are 10,000, 6,000 and 5,000. Capital balances are 10,000, 6,000 and 5,000. So we'll start with balance of capital. A's capital balance is 10,000, B 6,000 and C's capital balance is 5,000. That loan of A will be directly transferred to his capital. A's loan account debit to A's capital 4,000. Yes sir. Now since profit is before appropriation, we are preparing a P&L appropriation account also. Net profit is 3,110. Net profit as per P&L account is 3,110. This is profit of 2 months. Correct? Yes sir. Now what is to be given to A? How this profit is to be distributed? Interest on capital is to be allowed. We'll debit that to P&L appropriation. Some part of profit will be distributed, will be appropriated in capital ratio. Interest on capital will be allowed at 6% but for 2 months. So on A's capital, we are supposed to calculate interest at 6% for 2 months. On B's capital, on 6,000, again interest at 6% for 2 months. On C's capital, interest at 6% for 2 months. So total interest on capital comes to 210. Interest on capital will also be credited to their capital accounts. By interest on capital. $100, $60 and $50, correct? Yes sir. They are also to be given salary to partner. A is to be given salary of 300 per month. So here we need to give salary for 2 months, Jan and Feb. B is to be given salary of 250 per month. So for 2 months it will be 500. Total salary payable is 1100. Salary will also be credited to their capitals. Correct. Then about goodwill. Let's calculate goodwill first. What is your average profit? Average profit of 3 years. You are given profit of 5,500, 4,800 and 6,500. Profit of 3 years is given. So average profit comes to 5,600. Firm's goodwill will be 5,600, that is average profit, into 3 years purchase, 2 years purchase. So firm's goodwill will be 11,200. What should be treatment for goodwill? Will raise full value of goodwill in their old ratio. What is old ratio of partners? They were sharing profits and losses in the ratio 2:1:1. So we'll be raising full value of goodwill in the ratio 2:1:1. 5,600, 2,800 and 2,800. And then we would be writing off full value of goodwill in new profit sharing ratio. New ratio is 3:2. They will be sharing future profits in the ratio 3:2. So 6,720. A has died. New ratio of B and C will be 6,720 and 4,480. So net treatment of goodwill. A's account will be credited with 5,600. B will be made debtor with 3,920 and C will be made debtor with 1,680. Correct. So B, C to A. B's capital debit, C's capital debit to A's capital. $3,920 and 1,680. In A's account, we'll credit that by B and C's capital account. Correct. Then after treatment of goodwill, A's share was to be paid to his executor, B and C. Sorry, the firm had taken a joint life policy. Let's look at treatment of joint life policy. Let's look at treatment of joint life policy. If we prepare a joint life policy account, and there is also balance in joint life policy reserve, so we need to also prepare a joint life policy reserve account. In joint life policy, balance given is 3,600. Opening balance given is 3,600, correct? In joint life policy, balance is 3,600 and similar balance was there in joint life policy reserve also. Yes, sir. Since partner have died, policy has matured, and on maturity, insurance company is giving us 12,600. So for collecting that sum assured from insurance company, entry will be bank to joint life policy. Yes, sir. Also, after policy have matured, is this JLP reserve required in future? No, sir. So we'll close JLP reserve and we'll even transfer JLP reserve to JLP account, to joint life policy account. Joint life policy reserve will be closed and will be transferred to JLP. So in joint life policy account, even joint life policy reserve will be credited. And now whatever balance is left in joint life policy is our profit, which will be distributed among partners. Will be distributed among partners in their old ratio, that is 2:1:1. 6,300, 3,150, 3,150. Correct? So in partners' capital, will directly credit the profit of joint life policy. Joint life policy account debit to partners' capital 6,300, 3,150 and 3,150. So now find out what is amount due to A's executor, payable to A's executor. $22,600 minus 4,000. Amount payable to A's executor is 18,600. Will be transferred to his executor's account. Now before we calculate A's executor's balance, we need to close balance in P&L appropriation also. P&L appropriation account is showing profit, which is our divisible profit now. 3,110 minus 210 minus 1,100. 1,800 is the profit which will be distributed among partners. Two is to 1 is to 1. By P&L appropriation. So now balance in A's account. $19,500, that will be transferred to his executor's account. And they have very clearly said A के executor को तो cash में pay कर दिया है. A's executor's account is being settled in cash. So to cash or bank account. 19,500. Correct? Balance in B and C's capital is to be carried forward. 6240. C. Balance in their capital will now appear in our balance sheet. $13,210 total capital. Other liabilities include creditors of 3,790, profit distributed, joint life policy reserve distributed. Asset side, joint life policy no longer exists. There are sundry debtors of 20,000 and there is cash balance. Now cash balance we are supposed to calculate. Sundry debtors are of 3,900. Cash balance, opening cash is 20,000 plus 12,600 received from insurance company minus 19,500 paid to A's executor. So 13,100 is the remaining cash balance. Balance sheet total comes to 17,000. Correct? Yes, sir. So you may pause and copy. Pause and copy. Friends, we are now looking at question 4 in death of partner. Question 4. A, B and C are partners sharing profits and losses in the ratio 5:3:2. They took a joint life policy of 1 lakh. Policy amount is 1 lakh. A dies and you are supposed to pass journal entries relating to joint life policy. First case, if premium paid earlier is treated as revenue expense. That means the premium they were paying every year, they were transferring that premium every year to P&L account. They were treating that premium paid as revenue expense. For payment of premium, the entry they were passing is joint life insurance premium to bank, and at the end of the year, they used to transfer that insurance premium to P&L. That means there was no joint life policy account created in our books. There was no asset created in our books. We would say in this first case, joint life policy is an unrecorded asset for us. It is having zero book value. It is having no book value for us. Now, in case a partner dies, policy immediately matures. If there is death of partner, we would say policy will mature. And if policy matures, the firm, insurance company will pay entire policy amount to the firm. If the policy is maturing, insurance company is going to give entire 1 lakh to the firm. So firm would be receiving 1 lakh from insurance company. First entry to collect that 1 lakh from insurance company, that would be bank account debit. To joint life policy account, correct. Bank debit to joint life policy account. Can I now say this joint life policy, since was having book value of 0 in our books, since it was having no value in our books, whatever is received from insurance company is entirely our profit. An asset having book value of 0 is now realizing 1 lakh. So entire amount of 1 lakh is your profit. And since it is profit, profit at the time of reconstruction is to be distributed among partners. So this entire amount of 1 lakh will be now distributed among partners. So to distribute this among partners, second entry will be joint life policy account debit. To partners' capital account in their profit sharing ratio. To A's capital account 50,000, to B's capital account 30,000, and to C's capital account 20,000. So entire amount of policy will be now distributed among partners, being profit on JLP profit on joint life policy distributed among partners. Correct? Yes, sir. Come to case 2, friends. Second case. Now in case 2 they are saying if joint life policy appears in balance sheet at surrender value of 10,000. See, if you prepare a joint life policy account, they are saying joint life policy is already appearing in our books. It is appearing in our books at 10,000, correct? On death of partner, can I say policy have matured? Since there is death of partner, policy has matured and insurance company will pay entire sum assured to firm. So for collecting that entire sum assured from firm, first entry would be bank account debit to joint life policy. Bank debit 1 lakh to joint life policy account. Now, is joint life policy an unrecorded asset here? No, sir. Joint life policy already appears in our books. Balance in joint life policy is 10,000. On death of partner, we are receiving 1 lakh from insurance company. So an asset having book value of 10,000 is realizing 1 lakh. Asset whose value in books was 10,000 and it is now getting realized at 1 lakh. Can I say 90,000 is profit on realization of joint life policy? 90,000 is profit on JLP. And that profit on JLP always gets distributed among partners. Remember, the amount received remains in the firm. The amount we received from JLP is never distributed among partners. It is only the profit which always gets distributed among partners. So we'll distribute 90,000, the profit here, among partners. To distribute that profit, second entry will be joint life policy account debit. To partners' capital. To A's capital 45,000 will be distributed in their profit sharing ratio to B's capital 27,000 and to C's capital 18,000. Being profit on joint life policy distributed among partners. Correct? Yes, sir. Third case, friends. Third case. Now, in third case, they are saying joint life policy appears in balance sheet at surrender value of 10,000 along with joint life policy reserve. So, they have created an asset by the name joint life policy in books, and they have also maintained a joint life policy reserve. Reserve helps to write down JLP to bring JLP up to its surrender value. So, we would say in this case, we are having two balances in our books. If we prepare a JLP account, balance in JLP is 10,000, and there is also balance in JLP reserve, which is appearing in books at, they have not specified, sir. So, we would say even JLP reserve would appear in books at 10,000 only. We always create JLP reserve with the same amount at which we have created JLP. So, JLP reserve also would be appearing in books at 10,000 only. Correct, sir. Now, since partner died from insurance company, we would receive the sum assured. So, first entry for receiving that sum assured from insurance company, that is bank account debit 1 lakh to joint life policy. Correct. Was it a recorded asset or unrecorded asset? Sir, a recorded asset having book value of 10,000. Now, from insurance company, we are receiving a sum of 1 lakh. So, against 10,000, we are receiving 1 lakh. A book value of 10,000 is realizing 1 lakh. Can I again say there is profit of 90,000? There is profit of 90,000, and that profit of 90,000 will be distributed among partners. That profit will get distributed among partners. Sir, then what will you do with JLP reserve? Will that reserve be required in future? Joint life policy itself is getting closed. So, will that reserve be required in future? No, sir. So, even that joint life policy reserve will be distributed among partners. It's a reserve which is no longer required in future. So, even that reserve will get distributed among partners. So, what will you do? You can either directly distribute this reserve of 10,000 among partners, or you may transfer this reserve to JLP account. The profit, the balance in JLP won't be 90,000, the balance or profit in JLP would be 1 lakh. And then that profit of 1 lakh will be distributed among partners. Correct? So, we'll pass the next entry to transfer, to close JLP reserve and to transfer it to JLP account. JLP reserve is having which balance? Sir, JLP reserve is having credit balance. To close that, JLP reserve account is to be debited. So, entry will be joint life policy reserve account debit. To joint life policy. being JLP reserve closed and transferred to JLP account. And now balance remaining in joint life policy, that is 1 lakh, will be distributed among partners. The profit now in joint life policy account is 1 lakh, which will be now distributed among partners. Entry will be joint life policy account debit to A's capital 50,000, to B's capital and to C's capital account. Correct. Being profit of JLP distributed. Yes, sir. So pause and copy all the 3 cases.